of the day, the Reserve Bank of India announcing a slew of measures aimed at enhancing the resilience and competitiveness of the Indian banking sector. Ritu has been on top of this all day long, and she's here with the key takeaways. Ritu.
Well, Hormaz, I mean, this is the first time in over a decade of covering RBI I've heard of more than 20, banking-related measures being announced in a policy, and that has really been the story of this policy more than the monetary policy action. Whether starting with the expected credit loss, application for all banks, which was expected to kick in earlier. Now, RBI says will only come into effect from the 1st of April 2027, and even after that, banks will be given a 5-year glide path until 2031 to absorb the loss, to absorb any additional capital that they have to provisions that they have to provide for their loans. That is one. Secondly, and RBI is yet to give more details on this, to reduce the overall capital requirement for banks, RBI is also proposing to ease the risk weights for two key segments, MSMEs and residential retail, home loans. That is something we'll watch out for. The draft circular on forms and business, which had proposed that there be no overlapping business between the bank and its subsidiaries, has been scrapped. It was a draft, yes, it had not been implemented, but that had, put some sort of an overhang on companies like HDB Financial. For all banks that have these subsidiaries, that has now been scrapped and left to the discretion of bank boards entirely. Apart from this, after more than a decade or more than a few decades, RBI is allowing banks to get into M&A financing. We'll have to see how much market share banks will therefore be able to wrestle away from other financial institutions now that they're going to be allowed to do this. The regulatory ceiling on lending against listed debt securities has been done away with. RBI has also increased the limit for lending by banks against shares from 20 lakhs all the way to 1 crore rupees, and for IPO financing from 10 lakh rupees to 25 lakh rupees per person. These are big changes when it comes to lending for the capital markets. Apart from this, there was a 10,000 rupee cap, per specified borrower, above which, they couldn't borrow from the banking system. They would have to raise their money through the capital markets. That cap has been done away with entirely. As far as the large exposure framework is concerned, that continues on an overall systemic level, but RBI will look at more specific levels at a bank level. And infrastructure financing by NBFCs, the risk weights there are also proposed to be eased. So a draft of measures for banks and financial institutions that will surely have far-reaching implications.
22 measures. Well, a lot of them. Ritu, thank you for that update. It definitely showing on the Nifty Bank in today's session. But the auto